Alright everyone, welcome back to the channel for another Bitcoin update. So there's a lot to talk about today, from divergences, failed divergences, risk metrics, and even an AB equals CD pattern predicting a $12,000 Bitcoin. With that being said, let's jump right into today's video. So let's start off with the divergences, and specifically the hidden bullish divergence, which has now been invalidated. So as you can see, this is what we were previously drawing from, and in fact, if you do look at where this trend started over on the RSI, it was round about these regions over here. We have now wicked below where this trend on the RSI started from, and even if you did want to give it, the largest grain of salt in the cabinet and draw it from down here, which once again is a tiny bit of a stretch from where the RSI downtrend started from, you can see drawing from this box down here, even if we draw it in a range, you have now come down and invalidated this hidden bullish divergence. So this was exactly what we were predicting. This comes to absolutely no surprise to me. Why is that? Because we were talking about hidden bearish divergence on the daily time frame. This has been playing out for almost a whole month now. In 2 days time, over on Wednesday, this hidden bullish divergence would have been playing out for a month, whereas that hidden bullish divergence on the hourly time frame was really only playing out for 3 or 4 days. In my opinion, this hidden bearish divergence is going to continue to push us to the downside. If you don't know how divergences work, I did make a video on them yesterday talking about regular and hidden bullish divergence and bearish divergences, if you do want to learn about that. But nonetheless, nothing has changed in this respect. All I want to update you on this chart is that the hidden bullish divergence is now gone, it's invalidated, and the hidden bearish divergence is getting stronger and stronger by the day. I would not be surprised if potentially, let's just say hypothetically, we have a good CPI report, which I don't see happening on Wednesday. I imagine we'll be capitulating, and potentially you could even see a bounce back up to 21,000, which would allow this hidden bullish divergence and the RSI to break down a little bit more and then head up and get even more overextended. And if something like this happens, people would be thinking the bounce back to 21k and their rejection would be bullish, or they'd be thinking the move back up to 21k would once again be somewhat of a bullish indicator. But nonetheless, it wouldn't be. It would just be elongating this hidden bearish divergence. And the longer and longer this plays out for, you can imagine, the longer you extrapolate this trend line, the more you get bashed against this, the higher the RSI comes up, and then on the daily time frame, you'll reach a point where you've been in a downtrend for like a month or two, but the RSI is all the way up at 70, and then that is when you will probably witness the final capitulation over on Bitcoin. So those are the divergences. I would also like to just make a quick 1-second segment to say the dollar is on a massive rampage to the upside, and the stock market is about to open bearish. Now that's all I'm going to say, because I did make a video, Bitcoin Stock Market Blues, talking about what to expect over on the stock market and the dollar correlation. So that being said, let's move on to our next chart. Once again, this is another chart that is aging well that we've been talking about, this fractal, where you can see you've got a breakdown into a bearish pennant, breakdown into a bearish pennant. Let's not draw the pole just to make it a little bit more clear and concise. And as we're not drawing the pole, let's just imagine this as an asymmetrical triangle. So you've got a breakdown, asymmetrical triangle, breakdown, asymmetrical triangle. You break up to this white line, find your invalidation point, break up, white line, invalidation point. In both of these areas, you come up to the heart line. You have a one top and a double top over on the RSI. So this was when you came up, found your invalidation point, came back to the trend line, had a pretty big bounce, but all you did was solidify an M pattern over the next week or so, and that is what caused the next cascade to the downside. So if this fractal was to play out again, where you've got a double top over on the RSI and a M pattern over on the price action, we could definitely witness Bitcoin moving down to 19,800, maybe even 19,500, bouncing back up, coming up to 21,000, and once again this would beautifully line up with a bearish retest of the hidden bearish divergence on the daily time frame. This would just completely elongate the trend and make it even worse, because then you could see the RSI come back up, have another double top formation on the heart line around about 50, and then you could also create, a double top M pattern coming down on the heart line from this fractal. So this is definitely something that I'm going to be keeping my eye on. Just like this was the local top over on this fractal, I do believe, and I have been saying this for a while now, I do believe that this top is already in. I think we got overextended too quickly as well, and I find the move to the downside is much more likely. Now, moving on to the lower time frames, this is actually a zoom in on the 4-hourly time frame of the fractal we were just looking at. What you can see is that we broke to the upside, we had a fake out over on the EMA ribbons, we massively capitulated beneath them, and now it looks like we're setting up for a retest of the EMA ribbons. This could potentially mean we could move up to 21,000 before having that next leg to the downside. Would I be betting on a move back up to 21,000? Absolutely not. I think there's no momentum in this market, and we'll be looking at that in a second. I've been talking about this. There is no volume coming in to support this uptrend. I've been saying this for days now, and this is why we're already witnessing the capitulation. So, you know, we came up to the 200 EMA as well, didn't quite touch it, and then we broke down. Over on this fractal, you can see we had a fake out, broke beneath the 4-hourly EMAs as we came up to the 200 EMA, and then, you know, this is where we solidified this M pattern. It looks a lot cleaner on the daily time frame because this looks a little bit wonky over here, but on the daily time frame this was a beautiful M pattern with a double fake out retest of the 200 EMA. You had 2 fake outs collectively after you capitulated beneath the 4-hourly EMAs. So once again, if this is a fractal that we're going to play out once again, you could potentially see something like this. Move down to 19,800. This would cause the EMA ribbons to flip bearish over here, and then we could go for that last leg to the upside. This would definitely be supported if the CPI report actually has, you know, negative CPI, which I don't believe it will, but nonetheless, we could see something like this once again playing out this fractal. This is where the 4-hourly EMA would flip bearish as the price action moves heavily back above it. You could definitely see once again another fake out bullish flip coming into this M pattern and then having a capitulation to the downside. On the 4-hourly time frame, money is drastically flowing out of the market. Nonetheless, as we do, and if we do come back up to these EMA ribbons, we can definitely see this becoming overextended once again and head to the downside. And bear in mind, this is just the 4-hourly time frame. Over on the daily time frame, what you've actually done in both of these fractals is you've come up, got rejected from the daily EMA ribbons, and then over on this fractal, what have you done? Come up, got rejected from these EMA ribbons. You did this twice before, and I do believe that we could do this twice again. And I would also like to state that even though Bitcoin previously pumped up to 32,500, and in this fractal we only pumped up to 22,500, meaning there's a $10,000 gap between these two bull traps. What I would like to say is the money flow indicator right now is residing about 62, whereas over here when we were up at 32,500, we topped out at 52.5. So, you know, we're over 10 points above where we previously were. So it's definitely not looking good for Bitcoin. You know, while the price is going down, retail seems to be buying the dip, and this lines up. We know why this doesn't affect the price moving to the upside, because over on my channel we've been talking about whale alerts. We've been looking at what the top addresses for Bitcoin and Ethereum are doing, where are the outflows happening, what exchanges are they going to, and we also made an entire 20-minute update, whale watching, somewhere down here, Bitcoin and Ethereum whale watching. This video is still definitely valid if you do want to watch this and learn about what is happening on the on-chain metrics. I did also discuss it, I believe, in yesterday's video, 13-week downtrend, which I will once again comment on in 1 second. But these fractals are playing out to the teeth, but the momentum indicators are more and more overextended, even though we're going to lower price targets. And that is also what is happening on the daily time frame when we do look at the hidden bearish divergence. Price may be moving to the downside, we may be having hidden bearish divergence, but the market, you know, the strength of the market is becoming more and more and more overbought, meaning, you know, when we do have that next leg to the downside, it might be a lot more brutal than a lot of people are anticipating. So before we do move on to the risk metrics, I just want to spend 1 second also updating this, because we talked about this in yesterday's video, Bitcoin 13-week downtrend. We're specifically referencing the 13-week downtrend on Bitcoin, total crypto market cap, total altcoin market cap. When you're looking at the weekly time frame for the Heikonashis, we use the Heikonashis because these smooth out the trend. That is the gist of things. When you do look at the Japanese candlesticks, you can see that we do have quite a few fake outs, even though we're just solidifying lower highs every single time. So this is why we use Heikonashis. We switch over and you can see in uptrends, it's a beautiful sea of green. When you start having that red downtrend, because it causes because it takes more momentum to switch a trend from bullish to bearish, and subsequently because it takes more momentum to switch a bearish trend bullish, just like over here, you don't have these fake outs. So, you know, once again, putting this on the weekly time frame, if we do count these, I'm not going to count them, you can pause them if you want, but we are currently in, this candle over here is the 14th red week. For Bitcoin, we would need to close above 21,150 in order to be bullish over on these Fibonacci candles. So this is definitely going to be pretty brutal, meaning, once again, if we don't have a strong move above 21,000 and close a weekly candle by Sunday, then this is going to be the 14th week in a row that Bitcoin's been capitulating to the downside. This is all I want to show over on here. I'm not going to update, once again, the SPY or the dollar because we made a separate video about that before. Let's move over to some of the risk metrics. Now, obviously, I feel like it goes without saying that when you do look at the weekly time frame, the risk metrics are relatively low. In fact, when we do look at the risk metrics for Bitcoin, specifically this risk metric that I am using, this wasn't in play back in the day over here. But at this moment in time, we are the lowest level of risk that we have been in forever. But what I would also like to say with that is, you know, a risk metric is purely mathematical. It can't take in news, data, geopolitical news. It doesn't understand that we're about to enter a recession. So you definitely have to take the risk metric with a huge grain of salt. Over on the daily time frame as well, it is stating that risk is relatively low, which I would also agree with. In the long term. If you are buying Bitcoin like myself at these price targets, I do think this is going to be a great place to accumulate for the long term. Would I personally be buying now, expecting profit in the next year, in the next couple of months? Absolutely not. I think we're going down to lower price targets. I have been saying, though, if you're new to the channel, I have been buying in $1,000 increments from 25. So 25, 24, 23, all the way down to 18 because we came down to 17,500. Obviously, I've got buy orders at 17, 16, 15, 14. All the way down to 9, which I don't think is going to get hit. I don't even think that we're necessarily going to go down to 12, which is the price target of this AB equals CD pattern, which I will have to find in a second because this has disappeared from my screen. But nonetheless, this is what it is saying. In the higher time frames, there's not a high level of risk. But as you do head over to the lower time frames, you can see that we are so overextended on the 1 hourly time frame. And typically when you get this overextended, it's normally a sign that a big capitulation is soon to be in play. So this capitulation, when we were heavily overextended, coming into the red over on the risk metric on the 1 hour, we subsequently had about a 15% capitulation to the downside from this risk metric. Up here, where we started getting overextended, you can also see another 15% move to the downside would once again take Bitcoin back down to $19,000. And if we do go back down to $19,000, it's just not going to look good for the general market structure, because if we do zoom out, you can see once again below 19,000, basically below 20,000 is below Bitcoin's previous all-time high. So, you know, if we do spend a decent amount of time below Bitcoin's previous all-time high, it's just not going to look good, and it's not going to fare well for investor confidence. Now, if we do head up to some higher time frames like the 4 hour, you can see risk is relatively stagnant right now at this moment in time, mainly because we've been the same price on the 4 hourly time frame for almost a month now. So we're basically crab marketing with high levels of volatility to the downside, upside, downside, upside, downside, upside, downside, but nonetheless, we are basically range bound. Not too much has changed on this. Over on some of our other momentum indicators like the squeeze momentum, these are already starting to capitulate down to the downside very strongly. So, you know, looking at the squeeze mom, looking at the MACD, this should be indicative that the next level to the downside is very much in play very soon. Because of the most recent pump on the 1 hourly time frame, you can see the histograms over on the MACD on the 4 hour have started to capitulate slightly. But, you know, do bear in mind, you do have these times over on the MACD. The MACD is very reactive to quick swings in the price action, unlike the squeeze mom, which, as you can see, is normally a sea of red, then it turns into dark red and into green as you do have these switches in the momentum. However, over on the MACD, you can see, you know, over on the histogram bars, you have breakout, fake out, breakout, fake out, breakout, fake out, and it just continues with the trend. So I do think this is just a momentum reset at this moment in time. We are still below the heart line, so in my opinion, MACD should be heading to the downside as well. I'm not going to go into a super high amount of depth into every time frame for the momentum indicators, mainly because we covered this extensively in yesterday's video, so I don't want to update these metrics that I just covered yesterday because I'd be regurgitating info to the people who do watch all of my videos. So with that being said, I am going to go find the AB equals CD pattern and then I will resume the video. Alright, so let's talk about this AB equals CD pattern predicting a 12k Bitcoin before we do wrap up the video talking about the immediate short-term price target that I do think we're heading down to. So this is the AB equals CD that is currently panning out on the market. These are very simple to understand, and this is yielding a price target down here at 12,500. Now, personally, 12,500 is my absolute lowest bear market price target, and if you do watch my channel, you will know that I have been saying I personally plan on backing up the van and releasing all of my capital to buy the dip between the ranges of 16,500 to 14,000. However, I have left some capital on the side in case we do have a capitulation down to 12,500. The only reason I'm humoring this at this moment in time is because the dollar is extremely strong and the stock market has kind of been lollygagging for the past couple of weeks. Now, if we do confirm a recession, if we do continue to capitulate into the recession, then predicting a 17.5% drop down on the stock market would be extremely conservative, considering how we've broken through this when we're not in a recession, and this is what it looks like when we are in a recession. So once again, it may seem very, very bearish, but at this moment in time, we really haven't had the face tear moment for Bitcoin where people are like, oh my God, this is the price of Bitcoin now. And I remember being back in the bear market down here, and this was where, the pain couldn't get any worse, around about 6,400. And this moment in time where you capitulated down to $3,000, this was the, oh my God, I can't believe Bitcoin's at this price. And this was the exact same thing we saw over here, where Bitcoin came down to 3,800. These were the OMG face tear moments where the bottom was immediately in after, mass panic and mass fear induced in the markets. We're currently not seeing that right now. There's still NFT degenerates spending thousands of dollars on monkeys smoking cigarettes. People still have money to buy their favorite altcoin. People are still buying NFT shoes of Ponzi schemes. Like, I'm telling you, based on market sentiment, from being back in the previous cycle, I don't think we've had that final capitulation. I think we're staring it down the face and it's getting ready to come to us. When we do have this capitulation, once again, 12,500 is my absolute low target, but this box down here between 16,500 and 12,000 is where I think we're going to come down to. Now, why is this not too bearish whatsoever? Well, first of all, 16,500 is only an 18.6% drop. So, I mean, Bitcoin can see that like that in a day. And, potentially that is where I start to think the bottom is going to be in play, but we could come down to 14,000. There is TA backed up by that, and I'll talk about that in a second. If we do have this move down about 31.5%, especially if we have it play out in a short period of time, like 1 day or 2 days, 3 days maybe, of just a pure black swan event, pure absolute massacre in the markets, that would be the moment in time where when everyone starts getting really fearful, I would be getting super bullish. So round about this 14 grand, I really do think that is probably in play. Only a 31.5% drop, and you have to remember, down to 12,200, it's really only about another 40% drop. So it's definitely likely. I mean, we could have that in a week. It's, once again, very, very likely to happen in my opinion. But nonetheless, 12,500 is not where I plan on, putting a large amount of my money is. My money is where my mouth is. 16,500 to 14,000. I will back up the truck, and with the remaining capital that I have, that will constitute about 80% of my DCA, and I will leave some about 20% of the capital if we do come down to 12 grand, and I'll leave about 10% of the capital for buy-ins at 11k, 10k, 9k, which I don't think will get hit. And if they don't get hit, that's fine by me. I'll use the money to go on holiday, buy some nice stuff. That is my plan with the markets right now. I definitely recommend you formulate your own plan and not just listen to what I'm doing. But nonetheless, this is the AB equals CD pattern. If you haven't seen these before, you might be thinking this is a bull flag, but it's just drawn wrong. This is not a bull flag. An AB equals CD pattern is where you have an A, a B, a C, and a D. And why it's called an AB equals CD is because you bounce from A down to B, you have a correctory move up to C, and then you measure the move from A to B, and you extrapolate that move from C to D. Hence the name AB equals CD. It's really as simple as measuring the move from A to B, waiting for that dead cat bounce to be finished, and when you do have that final correctory wave back up to C, all you do is you move over the trend line, and bang, slap it right over the top of this. Now, I've actually been talking about this since about 26,000, and you know, the more and more time goes by, the closer and closer this gets, the more I think that this is not an absolutely outlandish price target. But once again, I don't think we'll be going below 12,200. That is my absolute low target, but I would be a fool not to put price buys down at 10k, 9k in case we do have a wick on some exchanges. So that's what I'm personally planning on doing. This AB equals CD looks like it's playing out to the teeth. I'm not gonna lie, it's very, very valid. Now in the short term, let's wrap up the video. Where do I think Bitcoin's going down to? So we've been talking about this for the past couple of months, but we've basically filled every CME gap. Now, we actually have created a new CME gap up at 29,000, which in my opinion, I imagine we could do something like this, where we come down, you know, find our bear market low. Let's say it's around about 14k, because once again, this is where I think the low is going to be. I could imagine we could have one quick run to the upside, fill the gap at 29,000, and then create a higher low for Bitcoin round about 18, 19, 20,000, where the previous all-time high is. Now, why do I think we're going to come down, have such a I don't know if you can use the word brutal, have such a brutal move to the upside, which would decimate the bears? Well, we did the exact same thing in 2018. I mean, look at this, from $3,100 up to 14 grand. You know, we had, or $14,000, we had a 360% pump. So, you know, if we do measure a move like this from 14 up to 29, this would be a 2x, a very modest 2x. And if inflation once again does start going through the roof, if inflation hasn't peaked, then, you know, once again, money could find its way into the markets, and this could definitely be in play. But in the short term, let's redraw this over, because we've moved down since we made this prediction. We're only 10% of the way down, or we're only 10% away from filling our third and final CME gap to the downside. If we do zoom in over on the daily time frame, you can see, come on, trading view, there we go. You can see this is where the CME gap is. So this is obviously on the Chicago Mercantile Exchange futures, and Bitcoin is not Bitcoin is trading, but Bitcoin does not trade on this chart over the weekends. So when Bitcoin has runs to the upside over the weekends, you create these price gaps. And as you can see, you know, we filled all the other ones so far. This is the third and final one down here at 18,400. That is basically what I see happening for Bitcoin. So in the short term, 18,500, 18,400, that in my opinion is going to be in play within the next 2 weeks. I definitely think we're going to be heading down there pretty quickly. Now, why do I specifically think 14,000? Or in addition to some of the TA that we've already drawn from? Well, if we do look at our one wave of our Elliott wave theory, you know, typically if you are going to bottom in an Elliott wave structure, it should be between the 1 and the 3 wave. We're miles away from the 3 wave, so the worst we can get is between these regions. The candle body closes over on Coinbase. In fact, they're a little bit higher over on Binance, but between 12,500, once again, backing up by the AB equals CD pattern, and even potentially up to this wick at 14,400 of the one wave, which is why, once again, I think 14k is the bottom. This is where I see us coming in a worst case scenario. If we do backtest 12,450 and we do go up to the moon and that is the bottom, then our Elliott wave 5-wave structure would be completely valid, just like it has in previous cycles. So that's all I've got for Bitcoin today. I know this was a slightly longer video. There was a ton of stuff to go through and update you on, but yeah, that's all I've got. You should know by now what I think is going to be happening in the short term. We looked at the momentum indicators, we looked at the lack of volume, we looked at the hidden bullish divergence, which was invalidated. We're looking at the hidden bearish divergence, which is getting stronger. Market sentiment's not changed. We didn't necessarily dive into on-chain metrics, but there's not much to update. Nothing's changed. Whales are selling, retail is accumulating, and the dollar is very strong. We made a whole update on the stock market earlier, so I won't jump into this. If you do want that, it is over here, Bitcoin Stock Market Blues. That's all I've got for you today, my friends. As always, cowboy out. Peace.